Now the carriers, different story. There's a lot of folks, a lot of carriers that have their own interest in payment processing. And so there's a lot of policies. They're not going to say, we're not going to allow agency bill for this, which we like to think that.
There's a lot of regulations and things like that, especially when it comes to moving money around that you guys have to adhere to. It sounds intuitively to us, it sounds easy to say, well, why can't you just pay the carrier on full pay and send us our commission just like you do on the premium finance piece? But speak to that a little bit, man, because you got to jump through some hoops in order to make that happen. It's not as simple as just deciding you're going to do it and doing it.
Absolutely. Yeah. So there's federal money transmission laws. So in terms of just basically, you can't pick up money twice from a pay in full perspective. Now, premium financing is a whole different animal, right? So when you're signing a PFA, essentially we're moving that through, there's third party banks involved. You're getting this power of attorney in that PFA. Like if you just know the ins and out of what a PFA does, it allows us to not really be abide by those money transmission laws. Now, handling payments and paying fulls, that's a different story. Now, when you're in the business of, depositing money, then taking money out of that, place where you deposit and moving it somewhere else, you're bound by federal money transmission laws. Now, there are ways to do that with like FBO. Okay, there's certain ways to, I don't want to say get around because that sounds sketchy. I mean, there are legal ways to be able to do this, and there's a way to build your infrastructure, whether that's pre-funding amounts, secured by incoming deposits. I mean, but there's a lot, there's a lot of bankers and a lot of lawyers that get involved when it says, okay, you want to move money, pay in fulls. We got to, seamlessly set up a structure here that's going to allow you to do that without you being bound by these, like I said, without you having to be actually a federal money transmitter, which that's a very, very expensive endeavor to be a federal money transmitter. Now you can hire third-party federal money transmitters and integrate into them. There's pros and cons to it. We see a lot of the cons being, again, you lose control of that infrastructure, and we've seen what that's like, and we hear what that's like because we know some people who are doing it that way, and then we hear, yeah, we don't know where the I called them, they had to call somebody else, and they had to call somebody else, and we have no idea where the money is, and that's what we want to avoid. So yeah, it is a ton of hoops that we have to jump through, but I can tell you we're intent on solving it for the industry, and then once we get those the basic building blocks in place, then it's really starting to work through those use cases, and how do we solve this, not just from an agency perspective, but at the MGA level, and then eventually the carriers. Now the carriers, different story. There's a lot of folks, a lot of carriers that have their own interest in payment processing, and so there's a lot of policies. They're not going to say we're not going to allow agency bill for this, which we like to think that. We think they want to make money too off the payment processing as well too. So we've actually had some discussions with some very large carriers and allowing us to go the agency bill route, but we had to jump through some hoops to be able to do that.
Well, I mean, I didn't realize it until I started putting the pencil to the paper. But if you start thinking about massive amounts of money, use ADP, for example, on payroll, the amount of money that they can make on the float by just only holding that money for like 2 or 3 days at a fraction of a percentage, the volume of transactions that go through, they make a ton of money. I can't imagine the insurance companies aren't in the same boat, right?
Absolutely.
They don't want to give up that float to somebody else if they can keep it in-house.
Yeah, and that's relatively right. That was once in vogue, out of vogue because of the interest rate environment. Now we're back in vogue, right? So we're talking to our customers too that probably 4 years ago would have said, yeah, no problem, move it for us. We don't need to hold on to this money. Who are now saying, no, we may want to take part in this float a little bit now in this interest rate environment. So that's just, you're right. That's another element that we're looking at in terms of if going to market and being able to do this, are some of the bigger customers going to want to do this? Who's going to want to do, who's going to want to float and who's not going, who's going to want to avoid it?
And I'm not saying that it's right or wrong to do it. I'm just saying that's how the math works, man. If you're a business owner and you're having, you're doing your payroll in house, or even if you're using a payroll company for that matter, you usually have to have your payroll released like 4 or 5 days in advance so that they can draft your account Then it sits there, and it's probably sitting there for like a good 2 or 3 days before it funds. We don't think about that. But when you have tens, if not hundreds of millions of dollars of transactions that you have sitting there for that amount of time, you can make a chunk of change relatively quickly. And again, we don't think about that because I don't have that kind of money, man. I ain't playing the float on 350.
Well,
You know what I'm saying?
right. Well, and that's like, and for the most part, I would say like people are seeing that, the efficiency gained and me not having to have resources, move this money around. Like for the most part, people see that's the benefit over the float, but there is a certain threshold for sure where that comes into play and that's what we're trying to monitor and try to better understand. Obviously, there's always changing economic factors with that. But yeah, I mean, really, like I said, and done is really just taking advantage and being able in a strategic way, being able just to, how do we tackle the payments industry without being caught up and trying to be a jack of all trades, because again, I will say this, if IPFS tries to handle being a payments company, now you have conflict of interest with, things getting in the way of making what makes them the best premium finance company. And so we've been able just to split that out. And again, we're being very diligent about what we saw. We do have that luxury of having the network, but that's our intent. Our intent is not to be this marketing behemoth at this point. It's to solve industry problems and solve them right, and then go to market and making sure that we're truly adding value.